Whether you've been trading for a while or you've just started trading, this is the RSI is one of the indicators that you've most likely heard and that you're probably planning on using for your trade. Now in this video, I will be going over what the RSI is, and also I will be going over some examples of how to use it in a chart, or at least how I personally use it, and what other factors do I look at to confirm the idea behind the concept of the RSI. So let's get started. What is the RSI? So the RSI stands for the Relative Strength Index. It is basically an indicator that oscillates between 0 and 100, and it tells you, depending on its value, if a market is overbought or oversold. An RSI value that is generally above 70, this market would be considered overbought, and the idea would be that you would expect the stock to turn around and start falling down. And the same way, if it is below 30, this stock would be considered oversold, and consequently, you would expect the price to start rising again. The way that I interpret it is that the RSI oscillates between 0 to 100. I struggled a while to understand it and how to use it properly. I was doing some research, and then I read a book where it said that the RSI, rather than indicating that a market is overbought or oversold, it is indicating the strength of the market. So traditionally, you have an RSI between 0 and 30. So that would indicate that this indication between 0 to 30 would mean that you are in a downtrend. So you would expect a reversal. And the same way, if you are between 70 to 100, you are in an uptrend. So then you would expect a pullback. There's something that did not sit well with me going through this process, because the question that I was asking myself is, from that period from 30 to 70, what is happening to the stock? This is a place of like 40 that is missing. So during that 40 move of the stock going to 70, what is happening? How do I interpret that? So would that mean that I'd have to wait until the stock gets to 70 to buy, or can I buy when the stock is above 30? And then through my research, I ended up finding out that if you are taking what the RSI is basically, so usually set up, it is an analysis of the last 14 candles for whatever time frame that you are in. So for example, if you are within the daily time frame, you would be analyzing the last 14 candle of the daily. If you are in the 4-hour time frame, you would be analyzing the last 40 candle of the 4-hour time frame. Taking that into consideration, if all the candle rises, that would indicate an uptrend. If you are going over a technical analysis, and the same way, if all of your candle falls, that is a downtrend. So going over what the RSI is, if it is proportional, that would mean that the more the candlestick rise, and the larger their size, then the higher the RSI would be. Using this information and what I've read in the book, which said that the RSI is an indicator of strength rather than indicating that the stock is about to be overbought or oversold. So overall, it is just telling you what is the strength of the market. Because if you have a candle that are rising, but they are relatively small candle, it wouldn't matter for the RSI. So the RSI would still rise, but slowly, because they are small candle. And the same way, if you have big candles that are rising, that are really big, so this rising motion with the big candles would result in bigger, with the value of the RSI that is bigger, because it is essentially comparing the last 14 candles because it is a lagging indicator. The higher the value is simply telling you that the last 14 candles have a value that are high. So that would indicate that the strength of the trend is really strong. You could put your money at an RSI value that is between like that is 30, and then it just keeps oscillating between 30 here and 40 there. The price will oscillate between these two values, and by doing so the price would still move. This candle will still be there, it will be oscillating, but that does not mean that the strength would go up to 70, would go up to 80, where you could make a profit and make a buck. And the same way, if you go to a value here that is 70, you could still oscillate between these for a while before it falls down if you are considering shorting a stock. So going over this, you realize that the RSI does tell you the strength of the trend. So if you have a value that if you have, whenever you have a chart and then you have like those big value and you have the RSI moving and you have this big move upwards, if you look at the corresponding candle, you would see that the move also was a big move as compared to the previous candles. The way I decide to interpret this value is that if you have an RSI that is above 70, that indicates that for the past 14 candles you are in a strong uptrend. The same way, if you are between 30 and 70, most likely you are moving sideways, so you are ranging. And if you are below 30, you are in a strong downtrend. Can the stock go higher? Yes, but it is also very likely that you can go sideways below 30 and then go down also. So these are all possibilities. The question then is, how would you use that? How would you use that information to trade? Personally, I do not only use the RSI alone, I use it along with other factors to make a trading decision. I would usually take a trade that is above 30. I would never take a trade where it is below 30 because the risk is too much. This is the daily chart of Alibaba. How do I like to use the RSI personally? Before we get into that, let's look at the history. We're going to be paying attention to this candle right here. But before we get there, let's look at the history of that chart. We had a really strong uptrend right there. If we look at the RSI, we went up, that is above 60. We broke 60, and then we went down, and then we will go here again. But if you are looking at that stock, how it moved during that period, it went from 283 to 295. So this is a strong uptrend. And if you are looking at the size of the candles are pretty big. But if you are looking at a third factor, which is the volume, you would see that here, the value of this volume that you're having for that time period, that was above the average line here. And as you can see, you have a short move there. So they pushed it up. The bulls pushed the market up, and going sideways there, you went here and you had a decreasing volume. So whenever that happens usually, and you have a decreasing volume and you have the RSI and you have the candle still going up. So if you are taking into account the last 14 candles, really the way that you can interpret this is that this candle right here is still being influenced by the move of this candle, because it is still within the last 14-day period. So when you aggregate them together, the value would still be going up. And then you move here on that side, you see, you look at the volume, but then looking at the RSI too, it is telling you that the stock is in an uptrend and you have a short move down, and this short move is done on a high volume. But the question is, when you are looking at all of these moves, this is the 70 line. The price does not spend a lot of time up there. It doesn't push. Rather, you have a move between 60 and 70. This is where I like to take my trade. I know before I said 30 and 40, so this is more like a visual for me to go ahead and understand where the stock is going. But if I have a stock that hits 60 and it's holding above the 60 line, and I have volume that can confirm the move like this here, this would have been a good entry. I could have you could have gotten in here. It tested the 60 line again and it hold, of course, because of that big move, and then you have the volume that were above average, and then it kept going up, so they were considering to buy that move. So if you are shorting this stock because the RSI would fall, right? Well, where would you take it? If you were to get in here saying that, oh, it's above 70, then it is overbought, then the market is due for a reversal. Yes, it's true, it would go down. But when you are looking at this here, you are going sideways, 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 and then you hit a high of 319. So if you were to get in here and use that as a confirmation because it is due for a reversal, so you would have lost from two, let's say you got in here at 297 to 319. So that would have been a $22 loss. So you would have lost. So although this indicates that the market is going down, the price still went up and tried to test it here, and that was the high. So using the RSI alone is not something that you would just go ahead and plan on, because you have to look also at the other factors in the market. And watch what happens next. You hit this high here and the market start falling. You go here and you have a big gap down on really high volume, and look at the RSI all the way down to 41. So going forward, you have the RSI all the way here to 33, and then you could have said, okay, then it is below 30, the market is due for a reversal. No, because as you can see here, instead of going up, it traded sideways, and during that move sideways, you have a choppy market with no clear indication of a trend. So if you were along here hoping that the market at 33, hoping that the market would go up, yes, you would make some money here depending on how long that you were holding. But coming down there, you would have lost the money because it went far lower. It went all the way down to 24, and this sideways move again. So this is the candle that I've marked. If you look at that, you have a big volume for sale, big volume for sale, and look at that. The RSI itself at this point started to move up. So that would indicate that the last 14 candles, their values are getting higher. Their values are getting higher and they are moving up because of that. So this is where I start to monitor. When I say 30 and 40, I start to monitor this move around here, and then I say, can it break the 50 line? And then on this candle, it did, and then going up with higher volume, and then it continued to move sideways all the way down to 60. Now if you are waiting for this RSI to go above 70 and go up to 100, that will never happen, so therefore you will lose money on your trade. So a good way would be, from if you're going long, from 60 to 70 and above for longs, and if you're shorting, from 40 to 30 and below, and then you will take your profit. So at least this is how I use it. This is what I look for in the charts. This is what I look for when they are moving. Are they moving sideways? Is it above 40? How is it behaving within that range? And then I also look at the news. What is the market sentiment, and what is the volume overall? So this is the video for today, and I do hope that you will be using the RSI safely in your trade. Again, do not use the RSI alone. Use other factors to make your decisions, and always make your due diligence when trading. And I will be seeing you in the next video.